Hello and welcome to another edition of the Mouthy Money podcast. I am joined as ever by Chris Chute, Head of Consumer Finance from financial PR agency MRM. Chris, hello.
Hi Ed, how you doing? You all right?
Yeah, good, thank you. So today we're going to take a little bit of a different tack, aren't we? We had a bit of a habit in recent weeks of tackling sort of political-ish topics around money and finance and that kind of thing, but we're looking at something very slightly different this week, and this actually is sort of comes from the fact that I'm actually a company of this business. I thought it was quite interesting, and I'm going to be getting upfront Chris's kind of comms brain to read the runes a little bit around it. But let's get into it. So, as I said, I'm a customer of this company, and that is Nationwide Building Society. So I've got my current account with them. And Nationwide is actually it's a mutual, it's a building society. So all of its customers are also members, and that means a few different things. You get some members that meet the right criteria, get payments from them, which is quite cool, interesting, and different. But the big thing is actually they have an annual general meeting where they invite members to come along. Actually, I think they do it virtually these days. Ask questions of like chief executive and other board members and that kind of thing, and generally kind of hear about the health of the business. Now, they held their AGM last week, and there's just some interesting stuff in there, I thought, and I was going to share it with you. So this is to do with, and it's a bit of a niche one. Basically, the question from the member was something along this lines. It was Nationwide as the contact details of all savers. So why do you make these savers sign up to a Savings Watch email when you could tell them about the deals yourselves? So what does this is to do with is an email that Nationwide, like a service that Nationwide has for its customers, where it tells them about kind of good savings deals and rates and that kind of thing. Which I think I'm sure you agree is probably a good thing, and we've discussed this in the past about kind of savings inertia and that kind of thing. Now, Chris, if you permit me, I'm going to read to you the response that Debbie Crosby, the chief executive, gave to this question.
Far away.
I think it's quite instructive. So Crosby said, our Savings Watch email is not categorized as a service message. It is considered marketing material by the regulator being the FCA. We are not able to send information on new products under current regulation, which is why savers have to sign up to and opt into receiving the communication. Unfortunately, regulation deems it to be marketing. Now, I don't know about you, Chris, but I found this very instructive. And again, this is the kind of we come back to this topic, don't we, of the world of unintended consequences in money, where what Nationwide are trying to do here is a good thing. They're trying to point out good products to their customers in order to get better savings rates, better deals, whatever. And they are being prevented from doing so by, basically just the consequences of regulation that stops them from sharing that information with their customers.
Yeah, it's a bit of a it's a complicated one, this, Ed, and as a lot of financial regulation does, and you're right to do so, you're focusing on the outcome, which I think is the right thing to do. Okay, so how have we got to the point through what is quite a complicated maze of confusion where a savings provider is not able to tell people who are their members that we've got better savings deals around? It is marketing, I suppose, is the first thing. So I can understand that. And I do think the regulator, as always with these guys, I'm in favour of sort of strong financial regulation in areas where there needs to be protection of consumers. So the FCA, this comes from a good place. If it's the Information Commissioner's Office as well, because I presume this is GDPR data stuff. So for those who don't know, that's kind of protects people's data and makes sure they're not getting spammed or added to lists where they shouldn't be on. I can understand where the genius of this has come from and why they might want to sort of characterize this for ease across what is a complex market. Bottom line is, though, you've ended up with potentially customers not getting quick access to information that could lead to better financial outcomes for them. And nobody has designed that with this in mind. And this is where you end up with, you've got large, complex financial institutions. You've got a regulator trying to use a sledgehammer to crack nuts everywhere to try and make sure that customers of those companies are not finding themselves at the raw end of deals. And what you end up with is a bit of an almost, I was going to say ungovernable. I don't think anything's ungovernable, but quite a massive challenge in order to make sure that everybody gets the best possible outcomes to them. And then you add into that the idea that we live in a completely information saturated world where individuals' attention spans are less because of the types of work we do and because of the lives that we lead and the amount of demands on our time and attention when it comes to media and social media and all that kind of stuff, which makes this even more harder and even more pronounced. So, yeah, it feels like that might be something that somebody somewhere in the towers of the regulator might want to have a little look at and just reappraise and fix again. But we are building on years of legacy systems, years of layer upon layer of stuff, and also some bad behavior in the past, which has meant that people do need to be slapped on the wrist from time to time. So it's quite a complicated situation. But where it's ended up is you're not getting that extra couple of percent on your savings deal if you haven't opted in, which doesn't feel right.
I mean, I think, it's such. It is for me. It's a bit of an esoteric topic for you, kind of, my mates, and Ellen, my wife, they probably, don't care about communications and marketing and how this works in the context of financial services and the rules and that kind of stuff. But I think the implication here is that the regulator does set rules, and those rules do have implications. And I think you're right. These things exist on a spectrum where obviously at one end of it, you don't want people being contacted to be duped into scams and, this kind of thing. And there is that area of, protecting consumers in that way. But then the logic and the function of the legislation, which is designed to effectively do that, and protecting people's data and this kind of thing, is creating a situation where people are prevented from getting better deals because a provider can't tell them that there are better deals without seeking their consent to pass that information on in the first place.
They're not prevented, I suppose. It's just harder to access it. It makes it harder to get. I mean, the deal's still available to them, right? But if there's a limited amount of people who are going to get the deal, then those who hear about it first.
You look at
obviously,
you look at the savings market, and this is like the savings market problems 101, right? It's the inertia of people who are in the kind of whatever rate that their bank offers them, and it's dismal compared to the market. But we've shown time and again with kind of research over the years that people just don't move. The loyalty penalty is real, and everybody loses in that sense. And we've even had, I think we had the regulator talking about the idea of no banks and things, and banks and all other providers having to notify customers when there is a better deal available than the one that they're on, and that kind of thing. And this just seems to work totally in contrary to that. I mean, it's frustrating in the sense that a business like Nationwide, they're never going to be out there to cause trouble for their customers. They are such a high profile, highly regulated and careful, and its peers alike are doing the same sort of thing. So can we not have a situation where things like this maybe are permitted? Or I don't know. I guess there's just no room for nuance in these things, which I find very frustrating.
Yeah, I mean, I've said before about the email that I get from Santander about don't just accept the mortgage deal we gave you 6 months ago. You've got until 2 weeks before it starts. Like I value that. I like that. I've said that before. I like that comms because, and I don't know if they're compelled to do it or if it's part of what they do, but yeah, it's really helpful for me to have that reminder. Yeah, keep my eyes open. See what else might be out there. It's a good kind of nudge in the right direction. I think the other thing to add on just that general point about the savings inertia is there are platforms out there now that can help me to do that kind of heavy lifting for you. I mean, you've got Flagstone, for example, one of these kind of cash savings management platforms where you sign up and they look for the best deals on your behalf. that's a good sort of example of where technological innovation has kind of broken it down a bit more and made it a bit easier for us to access it. And you can sign up to all sorts of kind of money supermarket type emails, or compare the market, and all those kind of stuff will give you some heads up on that stuff too. But the problem is the information overload, and we mentioned the term last week when we were talking to Tom Selby, which is analysis paralysis. You end up just getting overwhelmed with, there's a better rate here, there's a better rate there. When you run the numbers, you're like, is it actually worth my time? I'm only on this earth for about 85 summers. Do I want to spend most of that time trawling through deals on financial savings products? I don't know. I think to the wider point about sort of regulation impacting comms, I've come across this directly, as you would expect, working in financial services communications with lots of great organizations who are trying to do right by their customers and produce products that are going to help them. One of my sort of, I wouldn't say it's a pet hate, because I understand why it needs to exist, but is the disclaimer around investing. Because you've come up with this really kind of long, well thought out piece of communication that's going to try and convince people to start investing, which I think has been broadly shown to improve people's circumstances if it's done correctly and in the right kind of way, and risks are taken into account. And at the end of any kind of direct channel, marketing or comms, you have to give a massive disclaimer saying, yeah, investing is a good idea. It might build your wealth. Your money may go down as well as up, and you may lose everything. I mean, that is quite the hard stop.
Yeah.
When you're trying to take someone on an emotional journey. And I worked with a client, Scottish Friendly, for many years, who are really good at what we dubbed overcoming investor phobia. So they would talk a lot about the fact that people would just keep their money in cash savings when cash savings rates were really low, but they were afraid of going into the investment market because they were afraid of losing money, when really they were losing money in real terms because the rate on their cash savings was below inflation. And so we kind of talked about this idea of investor phobia and getting over these things. And it's an emotional journey. Money's an emotional thing. Taking risk with money is an emotional thing. You work hard to earn it, and it can feel overwhelming for people making those types of decisions, even people who are familiar with financial markets. And so to stick that disclaimer at the end right there just kind of checks all the momentum of people maybe taking the plunge down. It does take a time for you to take breath and then go again if you're not particularly used to this, to be able to get over that hurdle, I think. So why not do something different? Maybe stick it at the start of the kind of communication. I don't know. Look, here is the context. Some people make money, some people lose money. But here's a way that we think this could be useful for you, and let people decide that way. But anyway, yeah, I understand the necessity for it. People can't be burned by this, and too many have, and that's something the industry needs to hold its hands up with. But equally, it does present practical challenges when you're trying to get people to kind of trust you and take action. That can be a problem. So yeah, what are Nationwide doing anything about it, Ed? Have they?
There was no. I mean, I don't think there was any suggestion that they were. I mean, just to go back to the disclaimer thing, and I think one of the punchier views I've ever heard about that was, I mean, the disclaimer is factually accurate. Right? Yeah, you can lose your money investing.
Yeah, definitely.
Fine. But then the thing that the regulator don't force people to say is, if you don't invest, your wealth will potentially have inferior outcomes over a long period of time, and
also
this may
true.
also leave you poorer in the long run. And there is that kind of it's kind of looking at risk, but it's not looking at all the risk, is it? It's not really taking a full view of actually you've got to do the right thing over a long period of time, and that will make you well off as well.
It's looking at the most emotive risk, isn't it, Ed? I think it's the one where you might lose money in the stock market. Everyone kind of has an idea of what losing money feels like, but just letting money drift away or kind of lose its power over time isn't the same emotional reaction. So yeah, it's a really interesting point.
Yeah. So the next thing we were going to look at, and this very much relates to, well, if, responsible providers can't give you the information that you need, where do people go? There's a bit of research out, I think it was late last week, maybe, from Hargreaves Lansdown, who I think we've mentioned quite a few times, obviously big investment platform, looking at where people are getting their financial information from. And the results are quite interesting. I think the last time they ran the survey was in 2021, so this is now updated for 2024. So it looks like the number for younger investors, I think it's focused on, TikTok has risen from 12% of young investors in 2021 to 20% getting investment information from TikTok. And then the other one, which I thought was really interesting, which I think is probably one of the headline findings, is that the popularity of Reddit, which is, I mean, how do you explain Reddit? A online forum about basically anything you could ever imagine. That's risen from 17% of young people to 26%. So now more than 1 in 4 young people are getting their financial information from Reddit. So this is the big question, Chris, is, should they be getting their information from these places? Obviously, respectable publications like Mouthy Money are now on TikTok. But
but we don't give financial advice. If anyone,
we don't give financial advice, exactly.
I definitely don't.
I found it very interesting, very instructive, and I've got, I was going to get your views first. I've got about Reddit specifically, probably, but what is your view of where that information is coming from?
Well, yeah, this research is interesting. It's worth mentioning as well. We've done our own stuff together, haven't we? MRM and Mouthy Money in 2022. We had a look at this and identified this trend among young people in our Young Money report. Looking at, I think at the time we were saying that 6 in 10 18 to 29-year-olds follow influencers, with almost 3/4 saying they trust the advice they provide. So, yeah, I mean, if it's an influencer like you, Ed, then, I don't see any harm in that, although you don't give financial advice. But there are a lot of charlatans out there. And in fairness to the regulator, referencing back to our previous conversation, they've done a good job in sort of highlighting this issue and making sure that people are a bit more kind of aware of it. And the fact that some people from Love Island might be, I don't know if I'm being unfair on Love Island, I'm going to say reality TV. Some people on reality TV may be hawking products that aren't suitable for you just to earn a quick coin, which I think we'd all agree is not good. So where do I stand on Reddit specifically? When I think of Reddit, I'm going to be honest, I think of the GameStop stuff.
Yeah.
I personally, as a bloke in his 40s, I'm not on Reddit a lot, but I hear it come up a lot more with the next generation of people who work in my industry or who come into financial services coming through. They do go to it to kind of get ideas, is the phrase that's used here, for other things or feedback or to engage in conversation about stuff that matters to them. The GameStop stuff I thought was really, really interesting because it had a massive tangible impact. I remember them describing it as this isn't an investment movement. This is a riot. So for those who don't know, they kind of pumped the price of this kind of ailing games chain in America called GameStop for nostalgic reasons, and also to kind of give a bloody nose to the financial organizations over the water and across the world, who've been investing for a long time, and sort of use some of the practices that they perceive them to be using in terms of shorting the market or driving sentiment to inflate something before taking a profit. It was a really, really interesting moment in sort of technology and financial services, and maybe some latent anger around the global financial crisis and things like that as well, which all came to this kind of apex at this point. The problem with riots, Ed, is that stuff gets broken or burned. And so if you're in a place where riots can start, I wouldn't necessarily want to leave my money there. That's my instinct, being honest. And I might be being unfair. I'm sure there's lots of sensible conversations happening on Reddit. We were talking about this before, actually, in a separate session, weren't we? About if you Google stuff now and you're looking for a sensible answer, I tend to get responses from Quora or from Reddit from people who have kind of answered it in a kind of thoughtful way. So clearly that maybe it's going into a different phase of its existence. But I am worried about that kind of riot element and the lack of control and the fact that it's a bit of the Wild West. And there does seem to have been another thing around people taking personal responsibility for trying to change their lives with their finances and with investing. And that's a good thing to a degree, but also there are some, you mentioned some, I've mentioned some, Scottish Friendly, Nationwide, others, organizations who it's very much in their interest that you succeed because they're heavily regulated, and therefore perhaps information from those guys needs to be taken into account, as well as listening to some bloke in his bedroom talking about what he thinks about the investment market. So it's an interesting one. It does feel like it's coming more to the fore.
I think for me, I think the numbers are obviously instructive, but I don't think they'd necessarily surprise from anything that we've done before with the kind of Young Money research, and the fact that people do go on places like TikTok to find financial information, or if they're not actively seeking it, they are presented it and they find it useful or interesting or whatever. I mean, I do note that even on our TikTok channel now, when you look at our our videos, they come up with little automated disclaimers from TikTok about, financial advice and this kind of stuff, which is quite interesting and probably a good thing.
Yeah, I'd say so.
But I think, there's kind of a few different moving parts here in that, and I take the point about the providers. Providers need to engage with the platforms more. I think that's really important that they should. But then I think there's a difficulty of that. How do those brands sit on these kind of platforms and not come across as just a really fuddy voice?
I don't think they can sit on them, can they? People they
but that's
immediately
the thing,
use their
right?
cred. So
So that's why you exist in this space where you have actually finfluencers become important, because they become that bridge, right? Where they partner up with an organization and are able to do something together. Unless you, and one of the companies I've seen which do genius stuff on social media, I see it on LinkedIn actually more than anywhere else, is actually Monzo. Monzo do quite, funny, distinctive stuff, interesting tone of voice, all that kind of thing. And it's quite engaging, but Monzo's a different kind of brand and that kind of thing. So it's kind of, I think it gets away with it a little bit in a way that a big high street bank's not going to get away with it. On the Reddit thing, I think I'm a little bit more, I don't spend huge amounts of time on Reddit. I do use it, and I think done responsibly, it is actually for me, it's actually, in terms of information, actually quite an interesting platform. I think you've got communities like the Wall Street Bets community, which was, the GameStop driver of the GameStop thing. And that was very crazy. And almost at this point, almost of its time now, where that kind of hype train, everybody in pandemic, a lockdown at home and all this kind of stuff, very specific circumstances drove that on. We did see a bit of a revival of it earlier this year with GameStop stuff happening.
It has happened in dribs and drabs since as well, which is interesting. It managed to spark it up. But anyway, sorry, Adam.
Yeah. So, but actually, when I go on TikTok, I use, there's channels like, it's called like UK Personal Finance and other ones like that, where actually generally what you see happening on there, somebody with a genuine question will go on and be like, I want to save for my house. I earn £50,000. What's the best way to accrue a deposit, or something like that? And what you'll generally get is, generally speaking, you'll get good faith answers, saying, you should probably try and do this or do that. And actually, for the most part, that's what I see when I look at those kind of communities. And I think what's really interesting with a platform like Reddit, where you don't have the same kind of accountability on a social media platform, and this is why social media platforms get in trouble, is Reddit is community led and is community moderated. So you will have moderators on these different channels that are basically keeping an eye on all the content and making sure that things are above board. And if the moderators don't keep stuff above board, then stuff gets reported by users, and then Reddit ends up banning the channel because it's basically an outlier. It's doing bad stuff. And that kind of community driven information, content, and sharing, and that kind of thing, I actually find it's actually quite, for me, I find it quite powerful and actually quite good, generally speaking. I will obviously say to anybody who's thinking about, okay, I'm going to jump on Reddit and find out loads of stuff about money now, you got to take everything with a pinch of salt. Be very careful. Don't take one source of information as your source of information. If you read something on Reddit, look it up elsewhere, use another, website, use the money to find out if there's, more you can get to corroborate that opinion.
Well, we'll submit. You could submit your questions answered, couldn't they? I mean, generally to us, there are people who will help with that stuff. So
absolutely,
you can do it. Yeah.
But I think broadly, I wouldn't want to, basically tar Reddit with the brush of, this is crazy, people shouldn't be doing it, sort of stuff. I think it's much more, nuanced than that. So, yeah,
I think it's quite interesting. Sorry,
no, go on. No, go on.
I was just going to say, I've been sat here listening to what I think is a very reasoned response and thinking, but the name of the subreddit is Wall Street Bets, and a bet is not an investment, and that's sort of that's the reality of that. It's like, if you go into that knowing that, that's fine. But in the pandemic, when people were bored and finding themselves on this subreddit and listening to the wisdom of the crowd, that's another thing that, if you go deep in investing comms and investing conversations, the wisdom of the crowd is not always a good thing. In fact, often it's a bad thing. So it is all about your own personal parameters, and even the the most sort of established financial services investment providers will tell you that, you know, your risk appetite is your risk appetite and that's personal to you. You need to work out where that is. But I completely agree with you when it comes to look at different sources. I think that's just a good rule in 2024, isn't it? If you're getting your news off Twitter, Google it and see if it's on CNN or the BBC or whatever, because Lord knows what Elon might be telling you, or, you know, Instagram or TikTok or whatever. But it's interesting, the terminology used around this is about investment ideas about stuff. And that's a different thing. Sharing ideas, not necessarily a bad thing, but there are good ideas and there are bad ideas, and you need to find out if they're suitable for what you're trying to achieve, I suppose. And that's where, you know, doing a bit more research around it is important. Although we're all time poor, right? So there's a reason why these TikToks that don't last very long have a lot of credence, is because they kind of fit in with people's lifestyles as they are now. So it's not straightforward, but there are places to do it.
But this kind of brings us back. It brings us full circle a little bit on it. But and what I'm seeing more of now actually as well is, I mean, another topic area here on the regulation thing that we were talking about earlier is the boundary between advice and guidance. You know, what is advice, and you know that has to be regulated, that information, and then guidance. You know, what does guidance look like? Guidance isn't providing advice; it is points, you know, signposting to resources and that kind of thing. And this is a debate that the regulator needs to kind of, well, they're busy thinking about it, I think, at the moment, aren't they? But the thing that I find quite interesting and instructive is there's a lot of, well, I mean, hearing increasingly of people who are personalities online, you know, call them influencer or not, some people probably wouldn't. There is a move towards more people who talk about this information freely in public, getting advice qualifications and becoming sanctified to talk about this stuff freely online without, you know, worrying about whether you're straying between advice and guidance. And I find that very interesting.
In a good way or a bad way?
No, in a good way. I think
so too. Yeah.
I think it's possibly presaging and people predicting that there's going to be a crackdown coming from the regulator, that people are going to start having to get some sort of, you know, recognized qualification to be able to talk about this stuff freely online. It's not necessarily a bad thing, but again, this is the unintended consequence. And I've talked about this in the past with things like the Bitcoin ETF, where they don't let consumers buy Bitcoin ETF in the UK, despite it being widely available in other countries now. It just, when you ban stuff like that and you prevent stuff from happening in a controlled way, you just drive it offshore to riskier places, basically. And that's so you end up with a situation where you have lots of people in the UK who are potentially carefully regulated about what they can and can't say, in the same way that businesses are regulated what they can and can't say in a public sphere, be that on social media or wherever. And what happens is you just have all the kind of, you know, shonky people from outside the UK who are the ones doling out the exciting information. And they're never going to be accountable for anything because they don't exist within, you know, the regulator's, you know, purview, basically. And you know, you just end up with trouble that way. So,
but if you're doing your research and you find out that it's not regulated within the UK, presumably there's a good reason for that which would put you off. So there's an argument there that's communication in and of itself to say, maybe you shouldn't be doing this. But again, people who want to will find a way, I suppose, particularly in this kind of open trading, globalized financial environment that we kind of exist in now, which is being, you know, sped up by things like cryptocurrencies and the cryptoverse and that kind of thing. Time will tell whether that's a good thing or a bad thing, I suppose. Back to the thing about influencers getting qualifications, I think for those who don't know, who listen to this, and we're obviously in it, so we talk a lot about it, but access to financial advice is a major issue in this country. Like, unless you're earning over you've got a certain amount of assets, I think it's about £250,000 worth of assets, there aren't many financial advisors who will look at you in order to help you. And so there are loads of people trying to fill that gap, because most of us are kind of mass market in that term, rather than kind of wealthy enough for that to work for us. And what you're also finding is that financial advisors are getting older and older and heading off to the golf course and then retiring, and they're not being replaced. And it's quite interesting that maybe this is the way that some more fresh blood comes in. They build the audience and then work out how they want to be communicated and what needs to be said, and then learn together. Yeah. And although that probably isn't how you'd want to design it, if that's how it happens organically, then maybe there's some value in that for sort of normal people like us, Ed. The problem with that is that, you know, there's always going to be charlatans. There's always going to be people hawking rubbish online, and bad strategies and bad seminars and stuff for you to pay for. And you just need to always remain ever vigilant against that stuff. If it seems too good to be true, it's too good to be true, listener. That's my kind of experience of it. And there are no shortcuts. It's all about making good decisions day in, day out and building your wealth, I think. And if you're lucky, you'll have an event or you'll strike it lucky with a business or something else like that. It's not just luck, of course. It's hard work and good decisions. But if not, then, yeah, you need to be kind of careful and understand what's palatable for you and build your portfolio that way.
Yeah, I mean, I think there's an element of demographic change here that will probably change the way that who's getting the advice. I mean, if you look at kind of our age cohort of kind of millennials, you know, theoretically speaking, we are now the ones who are buying houses and, you know, starting to save properly for retirement. And, you know, when you enter the kind of your 40s and 50s, they call that your kind of golden years of earning. That's when your kind of earning potential and power is at its highest kind of thing.
Is it? So, God, yeah. Don't feel like that.
Well, now's the time, you know. I think, and there's an important thing there about, you know, making sure that you make the most of those years when you're in them, kind of thing, and realizing you're in them in the first place.
Yeah.
But yeah, I think, you know, the advice thing, there's probably more to come from the regulator on it, I would imagine. You know, I don't blame advisors for not advising people when they don't have assets, because advisors have a business model that is effectively dictated to them by, you know, rules that the regulators have changed in the past decade. So it kind of is what it is. You know, if we want to provide, then this comes back to the advice guidance thing. Do we need to provide a type of information that sits in the middle of those two things? And can you commodify that information in a way in which is profitable for the person commodifying it and also useful and value for money for the person who's receiving it? And that's complicated. You know, it's never going to be easy. And that's why we skirt it. And that's why we, you know, talk around this stuff and don't give out any specific, you know, information about what to do with your investments, because that would be advice and we shouldn't do that.
But that's where someone like Reddit fills the gap then. So yeah, this is always going to be an issue, I think. You've got lots of other better kind of robo-advisors that are able to do it. But if people are using this, engaged with it, like the communities, they are going to start asking questions outside their lives, kind of thing. It's kind of natural. So it's not surprising this is a thing.
It ultimately feels like a bit of an extension of, I mean, time and again when you ask people where they get financial information from, I didn't see it in Hargreaves research, but generally speaking, it's friends and family, right? And if you don't have a friend or family who you think you can rely on, or you've already asked them and you want a second opinion, I mean, it seems like people finding places like Reddit are a natural home to go and do that, particularly young people.
Yeah, I mean, I've set up a WhatsApp chat with some of my friends on this kind of thing, you know, and it's the engagement even on that with some of my good pals isn't that high. So you get occasional spikes of activity and then it kind of dies down a bit. So yeah, friends might not be around to answer, or family might not be around to answer, but someone on Reddit seems like is online 24/7 who's willing to give you a view. So I'll give it that. You know, it's a vibrant, interested, engaged, active community. So yeah, if you've got a question, you want to reach out to human beings as a starting point, I see that as a way to do it. But like we said, check your sources, do your research. That you can't just rely on that alone. And a bet is not an investment.
That's always that's the internet though, isn't it? If you want a view about something, there's somebody who's going to have it.
It'll be there. It'll be there.
If you want confirmation bias about it, someone's going to have that view and confirm your bias. So yeah, you know. There we are. Anyway, Chris, we've prattled on, but it's been another really good chat. I think getting into the weeds of how people talk to each other about money. But Chris, thank you so much for joining me again.
My pleasure. Good to see you.
And thank you everybody for listening. Obviously, you can catch us on, as we said, TikTok. We are also, the podcast is on Spotify, Apple, and on YouTube. You can watch us. And of course, for everything else is the Mouthy Money website and newsletter. So thank you everybody for listening, and we'll speak to you again soon.